Mashi from Ashark Bloomberg. Pierre, I wanted to ask you about the downward pressure on the dollar now. To what extent do you believe it can provide some pressure, some relief from the pressure on highly indebted emerging economies with a large share of dollar-denominated debt? And has this downward pressure on the dollar changed your outlook on all of those emerging economies that are still, under the impact of the high debt, as mentioned by the MD in previous meetings, where this high debt is really one of the impediments to growth? Thanks.
So we're seeing a weakening of the dollar that is fairly broad-based over the last few weeks. As I mentioned in my opening remarks, some of that is coming from the weaker growth prospects in the US. Some of it is coming from the increased uncertainty, and it's leading to a reassessment of the global demand for dollar assets. When we step back, we also have to realize we're coming from a position where over the last few years, there have been tremendous capital inflows into US markets, in particular risk markets. That's something that, of course, my colleague Tobias Adrian will talk about in the GFSR press conference. So we are seeing some adjustment, some correction. The markets are handling it. We don't see signs of stress, even in currency markets. Now, the interesting development is, what does it mean for emerging markets? And you're right to point out that in the past, when dollar would strengthen, that would not necessarily be good news for emerging markets because they have dollar-denominated debts. So that increases their liabilities and the pressure on them to service those debts, and that can lead to some tightening of financial conditions. So we are not seeing that right now, and so that's a plus. The flip side of this is, of course, the appreciation of some of these emerging markets currencies means that they are also losing a little bit on the competitiveness side. So there's maybe something that is a bit easier on the financial conditions, something that is not as easy on the trade side. Finally, this is an environment of enormous uncertainty, increased volatility, and that, I think, is something that will dominate for many of the emerging markets. So when we're looking at our assessment, we are actually downgrading the emerging market economies for 2025 and 2026. Most of them, some of them may, as I mentioned, benefit, but overall as a group, they're downgraded. While because they're also very plugged into the global supply chains, the uncertainty is leading to a pause in investment and activity, and they're going to suffer from the decline in demand for the products coming from the tariffs.